Let's bring in Mona Mahajan, senior investment strategist at Edward Jones, for a little bit more. Mona, good morning to you. Do you want to dwell, if all, on what we just heard from Walmart? I mean, I think this is really important. They're out there with a nice U.S. comp, even without the help of a lot of price inflation. The shares are up 7% last check.
Yeah, thanks, Kelly. Look, we liked what we heard this morning from Walmart. It does seem to align with the broader narrative of a soft landing and a consumer that may be cooling, but certainly not collapsing. In particular, I think the call out that this quarter has not really shifted in any notable trends, meaning the consumer has not seen a notable leg lower at the start of this quarter. That is a positive sign as well. So, of course, we'll be watching retail sales this morning, as well as that jobless claims number to reaffirm some of what Walmart is saying. But thus far, it does seem to confirm a soft landing narrative, which is great.
Yeah, no, you're brave for coming on to give an opinion. When an hour from now, we're going to learn, so many key data points. But I agree with you. I don't know how much they're going to move the needle now. Even the increase in jobless claims this summer is reminiscent of what happened last year. It doesn't seem like it's necessarily the kind where it starts to accelerate and then keeps going. But don't you agree that's probably, other than the jobs report, the main economic data point right now?
Yeah, it certainly seems like the other side of the Fed's dual mandate has now come under the spotlight. So, of course, this week we got the inflation narrative that was also reaffirmed. It seems like we're moving in the right direction there. So now all eyes are on that labor market. And we'll get, of course, the ongoing jobless claim series. We will get on September 6th, the next non-farm jobs report. That'll be the last one before the Fed meeting on September 18th. So, of course, what we're seeing in the jobs market broadly, that unemployment rate has ticked up to 4.3%. That's above the Fed's kind of target of 4%. So we're in a position on both sides of the dual mandate where they're probably poised to move here.
Do you think CPI yesterday makes them go just a quarter point next month instead of a half point?
Yeah, I think CPI probably didn't move the needle all that much. We liked seeing that two handle. We liked the 2.9%. We're moving in the right direction. What we didn't like was seeing the stickier shelter and rent part of the equation. We think that does still have room to move lower, especially as the shelter and rent catches up with some of the real-time data we're seeing, and we know that acts with a lag. We'd also like to see services broadly. It's been a little bit stickier than we'd like to see, but I think as wage gains start to cool, we'll start to see that come through as well. So in our view, the 25 basis point rate cut in September was probably baked in. I know there was some chatter about a 50 basis point rate cut. That to us, we didn't see any urgency for that in the economic data. So we think the base case remains at 25, and we probably see at least 2 to 3 cuts this year.
Mona, whatever specifically was driving this pullback we got starting in mid-July, it definitely reset I guess, some valuations. It took some of the steam out of the biggest index weights, the mega cap growth stocks, and then, of course, also interrupted what seemed like it might be an attempted rotation into the rest of the market. I guess, where would you look to try and gain or add exposure, if anywhere, within the market?
Yeah, we think the broadening theme probably still has legs here. What we'd say is we still prefer the large cap and mid cap space to play that broadening theme. We still remain a little bit cautious on the small cap space. It's more leveraged than average, and it does have less positive earners, more quote unquote zombie companies. So we'd still say stay in that large and mid cap space. What we'd say more broadly is, the theme of the last 6 months and really the last 18 months has been, if you had a narrow portfolio, you were doing well. If you were overweight technology, mega cap, tech in particular, that was the way to really generate positive alpha. As we think about the next kind of 12 to 18 months, we think the theme will really be you need to have that diversification in your portfolio. And that could include a complement of your, mega cap AI portfolio, but really you need to see other parts of the market in there as well, cyclical and value parts of the market, some large and mid cap, and even a little bit of international. And we think that diverse portfolio will be the way to kind of win in the next several months ahead.